It's great to be home here in Beirut at this event among great minds with great intentions. Over the past few months, Accenture and the Future Investment Initiative Institute, FII as it's called, worked together to better understand where AI value resides, where it's created, and where it flows. This wasn't meant as some sort of headline grabber or an opinion piece, but rather a diagnostic of the prevailing facts covering a wide range of data across the AI stack on investment, policy, talent, including direct discussions with hundreds of investors, founders, policymakers, and operators across more than 20 markets. FII proposed a framework central to the theme of its most recent 9th forum in Riyadh in terms of how to broadly consider the state of affairs, what it calls the global north and the global south. The global north includes advanced economies, such as the United States, Western Europe, Japan, South Korea, Australia, essentially the exporters of AI development. And the global south, which is much of Africa, the Middle East, Latin America, parts of Asia, developing parts of Asia, India, Indonesia, and the like, essentially the importers of AI development, though rich in ideas, talent, and demand in their own right. And what we found was not just an economic imbalance, but something much deeper, more fundamental in terms of sovereignty within and collaboration across the global south. We found that AI could add more than $10 trillion to global GDP over the next 10 to 15 years if both the global north and the global south were to operate and develop at their full potential. So a number slightly different than another number that we heard earlier. Perhaps we're just more conservative in that view. But the truth is, they're not at their full potential. And the imbalance, as you'll see, is quite severe. But we also found paths to help guide a rebalancing that are shaped by intentions, choices, and determination about capital, compute, talent, and focus, decisions regarding who builds the future and for whom, or who simply rents it, about the Global South's fight for digital autonomy in the age of AI, so the next generation isn't just a market for someone else's technology, but a designer of its own destiny. So let's have a look at some of the numbers that constitute this imbalance. While population distribution is 50% north, 50% south in the study, nothing else is. Of the $550 billion in AI-related FDI over the last few years, slightly more than 70% went to the north, and slightly less than 30% went to the south. In AI venture capital, 9 out of every 10 AI venture dollars flowed north, approximately $108 billion versus only $12 billion that made their way south. The infrastructure story is even more extreme. Let this sink in here for just a second. Less than 1% of global AI compute capacity sits in the global south, which means development efforts can cost 10 to 20 times more to train the same model in the south versus the north. On the talent front, much of which has been educated in the south, just about 3% of the world's AI talent works in the south. And out of the more than 300 AI unicorns worldwide, again, less than 3% are in the global south. Over 95% of AI startups in the south are concentrated and working on only the application layer of the AI stack, building brilliance on top of infrastructure owned and provisioned largely by the North. The South is training talent, writing code, building value, only to find that it moves on to scale exponentially in someone else's economy. Across the global South, there are over 23,000 AI startups, nearly a quarter of all AI startups worldwide. India alone is about half of these, and so far this year has already drawn close to 2.5 billion in funding. The AI startups of the South are currently valued at around 30 billion and climbing. Though only a fraction of the many multiples of this value seen in the North, the potential is unlocking and momentum is building. Today, there are only about 8 of these startups that have scaled to unicorns, compared with the more than 300 that are in the North. But here's the thing. These southern unicorns aren't just applying AI to existing problems, they're using it to create entirely new possibilities. Brazil's CloudWalk, transforming financial access with AI-driven payments and digital identity for small merchants all across Latin America. UAE's Expansio, reimagining human-machine interaction with AI-powered contact lenses that bring augmented reality into daily life. India's Krutrim, building multilingual AI models for India's many hundreds of languages, giving 1 billion people access to generative AI in their own voices. By 2030, nearly 2/3 of the world's new workforce will come from the global South. And 90% of global investors see this and have explicit plans to materially increase their investments in the global South. Now that we've looked at the extent of the imbalance, let's examine a bit of what we found on the shape of rebalancing. At least 4 key facets emerge that require major shifts: capital flow, compute infrastructure, talent assets, and focus on strengths. Miss one, and the whole effort collapses. They have to move in concert. So let's start with capital flow. The South has the growth, it's got the users, and it certainly has an abundance of challenges that AI can actually solve, yet the capital that should be fueling the innovation keeps flowing north. This flow is not about a shortage of good ideas, but rather a shortage of risk appetite. Investors crave certainty, clear rules, clear exits, clear signs that they'll get their money back, and ideally multiplied. And the South too often looks like a patchwork of unpredictable regulations and uneven exits. To address this, a number of themes surface. Blended finance, options which de-risk investments by making them safer and more predictable for investors through smarter financial tools, where public or development funds take the first hit if anything goes wrong, so private capital feels more confident to come in the face of so many unknowns. Targeted tax breaks offer a powerful and simple signal. It tells founders, hey, if you build your AI company here, it will be cheaper to grow. And it tells investors, when this company succeeds, your profits won't be eaten up by something that you don't control, and ultimately makes potential returns higher. Co-investment channels bring venture funds and sovereign funds together to the table, giving further vote of confidence to existing VC communities. clear exit pathways that define ways for investors to get the value they've created back. That could be through local or regional stock markets, where local startups can go public as alternatives to the usual suspects in the north, or through M&A corridors across the south, so founders don't have to move to grow or cash out. National agendas and governance, as we heard at the start of the day, show investors that the country is serious about what AI can do, how, by when, and where. Fewer than 1 in 3 governments, less than a third, in the Global South have even published a national AI strategy. That kind of uncertainty keeps capital frozen. For global investments to flow, clarity of rules, incentives, and purpose are all essential ingredients. An active promotion of local and national AI startups in tech success bring awareness and understanding when they would otherwise be opaque to investors not typically or readily engaged in the region. Government, in addition to VCs, play a major role in this. So once the money starts to move, the next bottleneck is compute and compute-related infrastructure. You can have all the funding in the world, but you can't build AI at scale if you don't control your infrastructure. And right now, the South largely doesn't. Our report showed that 95% of the South startups are just building apps. Just building apps. They are building on top of AI factories that they must rent from the North. And this isn't just expensive, it's dangerous. It means someone else can lock doors on your entire economy with one new law or tariff or export ban, as we've seen the Global North often do. Compute must be treated like a national utility, as essential as electricity or water. This is what sovereign AI means. It's about building your own sovereign GPU clusters and AI factories that you control. We are already seeing this happen. The UAE and Saudi Arabia are making investments in their own compute in a way that not only satisfies their needs, but also to serve the region at large. Brazil has pledged $4 billion in doing so. India is building its own capacity with the India AI mission. And for countries that can't afford to build their own, there are powerful alternatives. The notion of data embassies. This allows a nation to leverage a neighbor's infrastructure like G42 in the UAE or Humane in Saudi Arabia or India AI in India, while keeping its data and controls legally protected under their own national laws, just like a real embassy. Countries in the Global South can also create AI sandboxes, essentially compute and regulatory microcosms where startups can develop, test, and train models, whether LLMs or SLMs, as we heard about earlier, in high-impact areas from healthcare to fintech and beyond, independent of local and foreign intervention. Next is talent, and perhaps the most fragile of the bunch. The South trains brilliant minds, many of them here in this room, and then watches them leave. It educates engineers, data scientists, researchers, and too often they go and build the future somewhere else. And that's not ambition, that's leakage. The goal isn't to stop people from moving, it's to make coming back worth their while. The South need AI fellowships, return incentives, diaspora co-creation programs that link global experts to local projects. Top AI talent should be treated as critical national infrastructure, every bit as vital as ports or energy grids. AI education ought to be hardwired across the system, from elementary classrooms to universities to vocational centers, so building locally starts as early as learning. Public and private collaborations on income and benefit incentives will also offset the attractiveness of being elsewhere, or make being home not a question of surviving, but also of thriving. Such maneuvers might not stop a brain drain, but start to build a brain circulation. And last, and certainly not least, focus on strengths. The South might not outspend the big frontier labs in the US or China, but countries across the South can outfocus them by playing to the respective strengths in those industries and sectors where credibility, success, and recognition already exists. A sort of frugal innovation focused on the hard, unique problems, or as extensions of where local momentum is already recognized. Think of India and Egypt, already brilliant in agriculture and IT. Well, AI ought to build on those. Lebanon, as we've heard and as many of us know, is known for its healthcare, tourism, among others. AI ought to start there. Latin America excels in logistics and supply chain. AI ought to focus there. Less Me Too applications and more on where data, talent, knowledge, expertise, and brand are already focused. It means governments, investors, and universities form triple helix coalitions that align national priorities, capital, and talent. We're already seeing this model emerge. As we heard, Humane is building homegrown AI products and human-machine interfaces to power national platforms, showing how sovereign technology can serve local users first. G42 has become a full-stack AI and cloud powerhouse, developing its own models, data infrastructure, and partnerships across health, energy, and defense. Both prove the same point. When vision, capital, and academia align, you don't just build startups, you build ecosystems. What the South has always been known for is its resourcefulness in the face of limited resources. That same paradigm must permeate the road ahead around these themes and perhaps many others. The path to 10 trillion is not about how do we make more unicorns, another 20, another 30, but perhaps building 1,000 or 2,000 or 3,000 $10 million companies or $100 million companies on owned AI infrastructure that will accelerate socioeconomic benefits throughout the Global South. If capital can be de-risked, compute built as a vital utility, talent treated as critical national infrastructure, and focus exerted where there is a right to win, then the Global South starts being less about testing grounds for other people's models and more of the engine room for the world's intelligence, while also further securing its digital sovereignty and its digital autonomy. Thank you.